Understand the overall implications of that and the quarterly numbers with Abhijit Roy. He is the Managing Director and CEO at Berger Paints, now joining in. Good morning and great to have you on board. Lots to chat about, but let's begin with the numbers and great top line growth. Can you tell us what exactly has been aiding this? Is it particularly the festive season demand?
Yeah, that's more or less, because seasonal demand this time was in the third quarter, because the Diwali was a little late. So therefore, the demand picked up, towards October, and it continued in the month of November as well. But overall, it has been a good quarter. The decorative business specifically, grew well, and therefore, we could register the top line of about 22%.
All right, that sounds fairly encouraging in terms of your overall top line growth. What about your domestic volume growth? What has it been for the decorative segment, and how did the premium end of the portfolio perform?
The domestic volume growth was about 19%, which is primarily for the decorative category because, we are about 80% in decorative. Though the strong 20% that is there in industrial pulled down the margins a lot, so that is another story which is there. As far as, the premium end of the market is concerned in decorative, it grew pretty well. In fact, at a pace which was much faster than the 22%.
And give us a sense of, you've recently acquired a stake in Sabu Hesse wood coatings. What is the rationale for this?
So this is, a new technology which is basically UV coating, which is used, in the industrial wood coatings. So there are major players who, manufacturers of furniture who use this particular type of paint. This technology belongs to Hesse, and, it's a joint venture, therefore, between us and them. We are owning 51% and they are owning 49% in that.
Okay. Also just want to understand how does and with what frequency really, Abhijit, does movement in crude price trickle down on crude derivatives and eventually your costs?
So we are, linked to that prices, because once the crude prices tend to fluctuate, along with it, there are certain types of raw materials which are direct crude derivatives, especially on the industrial side. And also in decorative, certain items like monomers which tend to fluctuate more with crude. So those are the ones which tend to fluctuate as much as with crude, and what happens typically is that once the prices go up, you are not able to pass on that immediately. In the decorative, you can to a large extent, but in industrial, it takes time. And also you hold some inventory of, old stock, which is there, which is at higher prices, which tends to, neutralize over a period of time. So that is why initially there might be some impact, but it tends to pick up after that.
Right. Now that crude more or less, Abhijit, looks pretty settled around $60, $62 per average, what is the average that you're seeing in derivative prices?
So, now already the raw material prices have dropped, and from December mid onwards, the prices have settled down to much lower levels than it was earlier. And therefore, that benefit will kick in this quarter. So from February onwards, because there's some stock which is there, which will last in January. But from 1st of Feb onwards, probably, we will get the full benefit of the drop in raw material prices, which will expand the margin, in the last 2 months of this quarter.
Okay. What is it that we can expect on the margin front going forward from you, Abhijit? And how is it that you're managing your pricing also?
So that's what I said. We had taken 2 price increases actually, 1st of October and 1st of December, in order to, especially on the decorative side and also on the industrial side, we did get some amount of price increase in the last quarter. So therefore, prices have gone up, and in meanwhile, raw material prices have started dropping. So that will expand the margin in the months of Feb and March. So that should help, in improving the operating margin.
Okay. Now, Abhijit, I want to talk a little bit about the overall budget, and given the fact that it was fairly friendly to overall consumer demand and consumption driven and consumer demand essentially picking up, how have you assessed the budget so far, and do you see that there will be a lot of, pick up in spending overall that can benefit the sector in the long haul?
So it is positive in the sense that, there have been certain stops which have been extended or given. especially for the real estate sector, and also in consumer demand in general do tend to pick up, in the election season. So therefore, that is expected a little bit. How much of it, only time will say. But we expect that some amount of uptick will happen in demand.
All right.